Hi guys and girls, this is Henry here again today. Appreciate you all for always tuning in. Today what I'm gonna be talking about is S&P 500 and I'm gonna try to explain market structure, how to understand market structure, and not get caught being at the wrong direction of price. Now, I used to make this mistake a lot of times in the past in my trading where I see things like a break of structure and something like this. For example, I call this a high and price created this low, grab liquidity from this high, displaced, broke this low. So when I see this low get broken, I then assume it's a break of structure. And as price is coming inside here, previously, here would have been my position looking for sales for price to continue to the downside. So this used to be how I analyze the market and trade, and it's really affected my trading because a lot of times I always ended up in the wrong direction of price. And so many times, to an extent, it made me think maybe I don't even know what I'm doing. Maybe I should go learn something else, learn another skill, rather than wasting my time, money, energy, everything, trying to be great at this skill set. But the more mistakes I made, the more I learned. The more I adjusted, the more I have better understanding of the market, market structure, price action. And I'm going to try to explain that in the most simple terms. So if you're watching this, you can have a better understanding. So this is the current price action. And from this, you're going to have an understanding of what I'm talking about when this plays out. And you're going to see that I didn't really forecast this after it happened, but before it happens. So as you can see right here, price made a high and we made this low. And after that, we broke structure. Now, after this structure got broken, I'm going to go to 4-hour time frame. After this high got broken right here, price made this high, made this low, this high, made this low, made another high, and it broke this low, right? So the usual me, when I see this, I'll call it a break of structure, and I'll be looking for price to come up so I can sell this. Without having an understanding that your focus is not this, this, this. Price can literally come way down, take this low, 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 and even this low, price could literally come way down, take all these lows, and still be bullish. Now you'll be wondering, how did this happen? How did it break structures and still rally, taking this high? Now the reason is because what you should focus on in market structure is the swing highs, swing low, the swing high. When price makes this swing low, this swing high, these are your major position to consider a structure shift. For me to become bearish, if price takes this low, I'm not bearish. Takes this low, I'm not bearish. Take this low, I'm not bearish. But if price takes this swing low, I am absolutely bearish. And if we see a retracement, I'm going to sell to continue lower. I don't know if that makes sense, but if you watch this video and you still don't have an understanding of what I'm talking about, you can write me a message in the comment section, and I can make another video another day to explain this further so you can have a better understanding. Now, after price had done this high, retraced, came to this fair value gap here, mitigated it, and then created a new high, as you can see right here. Now you can see how confusing this can be sometimes. After price created this high, now this is the new swing low. If price goes below this low, I will no longer be bearish. But whatever price wants to do here, I do not care. It can do whatever it wants to do. I do not care. As long as it does not go beneath this low, I will continue to be bullish. Once price goes below this low, my market structure has shifted from bullish to bearish, and I will no longer look for buys but shorts only. Now, this is a current price action, and I'm intentionally using the current price action to explain this because it's always much easier to explain something to someone when they are actually seeing the current price action, because when you're using old data, the person could actually not know what it's going to look like in current price action. So now in the current price action, like I said, you can see how price made another high, made a low, then used the wicks, grab liquidity here, displaced. You can see how price went below this low, and most traders will see this and classify this as a break of structure, and they're going to be waiting somewhere here. From here, they're going to be looking for sells here. This is what most retail traders are going to do. They're going to be waiting for price to come into this position and look for shots. They look for sells. They want price to come here and then continue lower. That's what most retail traders are going to be anticipating to see. But for me, I'm not going to be looking for that. I'm going to be looking for longs. Why will I be looking for longs? The reason is simple, and it's because price has not broken my swing low. This is my swing low, created this high, price made a low, high. Everything here, in my opinion, is a consolidation. I do not care how many lows price do break here. I am not interested in it as long as this low is maintained or sustained. Now, what do I do from here? I'm going to mark my point of interest from this low to here. I would want to see price feel this imbalance. And as you can see, price feel the imbalance. This is a high. This is a low. How will I know the bottom is in on the S&P after it comes to my point of interest? It's a break of structure, a change in character in price. Once I see price break a 4-hour time frame high like this is a 4-hour time frame high, and as you can see, structure broken. What will I be waiting for afterwards? Is a retracement. A retracement into here. I want to see a retracement into this position. And once I see that, I'm going to long this for price to fill these imbalances. I'm going to take this high and continue to the upside. So guys, please note this is not an investment advice. It's my opinion and only to be used for educational and entertainment purposes only. So guys and girls, if you find this insightful, you can comment at the comment section. If you have a question, you can leave it at the comment section. If you have something you want me to look at the next video, you can also leave it at the comment section. I'll go through them. And I appreciate you all so much. I appreciate you for tuning in. Appreciate you for sending the video, sharing. I appreciate you so much. And I keep doing my best to always give you the best content so far. So that each time you tune into my videos, you're going to be excited to see more and hear more from me. So I will see you all next time. Have a nice day.